Hi, and welcome to the Morgans Edward Street Weekly Wrap for the week ending the 15th of September. My name is Tristan Alholm and I'm a Senior Client Advisor at Edward Street. Over the course of this update, we will be referring to particular stocks, sectors, themes and recommendations. Please be aware that our comments are general in nature and please speak to your Edward Street advisor to determine if the advice is right for your circumstances and risk tolerances. Global markets have been trending higher over the week with surprising lack of volatility given the current geopolitical concerns. To give us a more detailed summary of the week, I'll pass over to Brad Burns. Brad.
Thanks, Tristan. While the equity markets have been shaking off any concerns this week, Hurricane Irma has been playing havoc with base metals, gold and oil, which have all had wild swings. As the damage is seemingly not as bad as feared, and relief that North Korea did not mark its founding day last Saturday with another missile launch, the Dow regained all of its last week's losses in just the first 2 days of this week. Domestically, low interest rates are set to remain for some time to come, with RBA board member Ian Harper commenting on Wednesday that the Australian economy is still operating below its potential. So while this is the case, why would there be any change in monetary policy? In other news of note, the 2-day CLSA Investors Forum kicked off in Hong Kong on Monday with a raft of major Australian companies presenting. One notable presentation was from Macquarie Group. The investment bank reaffirmed that operating groups are performing in line with expectations. Guidance continues to be for Macquarie's full year 2018 net profit contribution to be broadly in line with prior year. This has pushed the price over $2 on the news. As we've noted over the last few weeks, large caps have really struggled. Post-reporting season, it's been observed that earnings growth for the ASX Top 50 is expected to be a mere 2% in 2018, while earnings growth for the small industrials is expected to be 10% for the same time frame. It's therefore interesting that both groups are trading on a price-to-earnings ratio of about 15 times. To that end, it may be worthwhile casting a broader eye over the smaller end of the market. Stocks like Aventus, Bapcor and NextDC are all part of our high conviction list. Please speak to your Morgans Edward Street advisor to see whether any of these are appropriate for you. And finally, in tech news, the iPhone 8 and iPhone 10 was released this week. Over the last 10 announcements, Apple ended the day negative 80% of the time, but was positive the day after 70% of the time. After trading almost double the usual volume, Apple did break this pattern by being off on both days. With a $1,800 price tag and a durable glass casing, I think I'll stick to my iPhone 7. Tristan?
Thanks, Brad. Very comprehensive. Now over to Cameron Mole to find out what he's been buying this week and why.
Yeah, thanks, Tristan. The stock I'll be talking about today is Apollo Tourism, ticker code ATL. Apollo Tourism is a family-owned, vertically integrated manufacturer, rental fleet operator, wholesaler and retailer of recreational vehicles in Australia, New Zealand and the United States. Apollo operates a vertically integrated model where the company builds, rents and sells a diverse range of camper vans and recreational vehicles. Apollo operates in a highly fragmented market. With forecasted earnings growth of approximately 40% FY18, our analyst Joe Little believes this will largely be contributed by recent acquisitions from the Sydney RV and Kratzmann businesses, George Day Caravans dealership and Canadream. We see 3 catalysts that can re-rate the stock. Firstly, the global expansion and potential to take market share in the United States remains an appealing opportunity. With a growing presence along the East Coast, this will give travellers greater options, allowing for more one-way trips. Secondly, the key driver of the RV rental market is the tourism industry, with the number of domestic and inbound international tourists a key determinant of demand. Relevant industry bodies expect international arrivals to Australia, New Zealand and the US to be in the range of 3 to 5% growth per annum over the next 5 years. This bodes well for the regions in which Apollo operate. My final point is the potential for Apollo to expand into other geographic regions and make value accretive acquisitions as they arrive. Apollo recently reported its maiden listed result, whereby it beat prospectus by 12%. Trading at $1.38 or on a PE of 14 times FY18, we remain happy buyers of the stock on any weakness. Joe has a 12-month price target of $1.56. Thanks, Tristan.
Thanks, Cameron. That looks to be an interesting stock with an excellent demographic tailwind. We have a fairly full pipeline of upcoming IPOs, ranging from small growth stocks up to a larger, more established industrial business. Please speak to your advisor if you'd like more detail here. Well, that wraps up another edition. Please speak to your advisor about any of the stocks we have mentioned today, and we'll see you again next week.